Hello everyone out there, how are you all doing? I am Kate Hill, as always bringing you the best and unbiased and honest content on property, along with some fantastic hints and tips. Today, stay tuned for all your latest property news. The pace of growth of unit rents is starting to surpass that of houses in many of our capital cities. The latest Domain Rent report shows that the combined capital cities' median unit and house rent prices both came in at $600 a week, up 20% for units and 9% for houses in the past 12 months. There were 5 cities that had annual rent increases which were higher for units than houses. Sydney with an asking median unit rent of $680 a week, which is up 17%, while its median house price rose 12% to $730 a week. Melbourne's unit rents rose over 15% to $520 a week, while house rents rose over 14% to $650. Brisbane unit rents rose nearly 17% to $560 a week, and house rents rose 9% to $600. Adelaide unit rents rose by 12.5% to $450 a week, and houses rose 12% to $560. Perth unit rents rose 18% to $520 a week, and houses rose 17% to $620 a week. Domain Chief of Research and Economics said that while the unit market was affordable during the pandemic as people left the cities behind, that had completely changed in the past year. And all of this, of course, is happening because of our changing demographics. Rising rents and tight vacancy rates have resulted in an increase in first home buyers, according to Australian Bureau of Statistics figures. Its latest lending figures show that the number of first home buyers or first-time home buyers taking out loans increased by 20% in the year to November 23. The ABS says that first home buyer loan commitments rose 3.5% during the month of November. The amount that they borrowed to get into the market also rose by 26% in the last 12 months to an average mortgage of $505,000. It was, of course, the more affordable states that recorded the largest number of first home buyer commitments, with Queensland leading the pack in November, an 11% increase in the month, followed by WA at 4.7% and South Australia 3.4%. The ACT did record a 14.2% increase in first home buyer loans in November, but the ABS says that those figures need to take into account that the market is much smaller and more volatile than some of our other states and territories. Price growth in 2023 means that Australia as a whole has fully recouped any losses from 2022, according to a new report by property analyst Oxford Economics Australia. It says that the national median house price hit a record $939,000 in December 2023. The report says that total listings for sale are finally starting to lift in Melbourne and Sydney, a trend that they expect to continue in the coming quarters. But the low levels of listings will continue in Perth, in Brisbane and Adelaide, leading to further price growth in those cities. Predicted interest rate cuts in late 24 could accelerate broad price growth again, and that the pace of unit price growth will be faster than house price growth in the 2 years to 2026 as buyers seek out more affordable options and our household size shrinks. While gross rental yields have lifted as well as loans to investors, the report says that with many state governments increasing charges on residential property investors and targeting the short stay letting market, they believe that the chances of rental supply increasing significantly are very low. According to API's property sentiment report for the last quarter of 2023, Queensland remains the top choice for property investors, but WA is gaining in popularity, and I'll say surpassing New South Wales. Perth's property market saw a remarkable 15% annual increase in 23, making it a focal point for investors and migrants seeking affordability. Forecasts predict a 10% growth in Perth house prices in the next 12 months, Whether that is sustainable obviously remains to be seen. The tight rental market with a 0.4% vacancy rate and a 15% yearly increase in median rents adds to its appeal. Queensland strengthens its position with a 35% preference among investors. Brisbane, with a 13% annual property growth, contributes to Queensland's appeal. New South Wales slips a little bit to third place, impacting smaller states as well. South Australia's rise is halting. The Northern Territory and Tasmania diminish in investor interest. Despite a pessimistic outlook in late 2022, and don't the forecasters love those doom and gloom headlines, the property market as a whole experienced very strong capital growth in major cities, including double-digit increases as we've seen in Perth, in Brisbane and in Sydney. Higher home equity and an 8.3% national increase in rents countered elevated repayments. A record 21.5% of survey respondents now prioritise buying investment properties in 2024, signalling more optimism. Notably, there's a significant shift towards a positive long-term outlook, with 19% prioritising retirement security, a leap from 5% a year ago. Now, this change, they say, is remarkable given that just over half of API's magazine readership is aged 25 to 44. A year ago, concerns about potential rate hikes dominated, but current sentiment reflects confidence in property's resilience to such challenges. Now, as always, I will keep you posted on all things property from around Australia as our year progresses. It's nearly February. Don't forget to hit the subscribe and like buttons if you are enjoying all the content, and I will see you again really soon. Bye.